The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the December, what is it, 21st? Yeah, the December 21st. Fantastic Friday, marvelous Monday, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, and kind of taking the opening still a bit easy, still recovering from some nasty virus out there. Just trying to take it easy, but come next Wednesday, hopefully I'm 100% back up to speed. I would love to hear from you. You can do that by giving us a call three ways. You can give me a call at 877-927-6648. If you don't want to call in, I get it. I heard from a long friend of mine that I've known since, so Mike and I met just in middle school. And he just happened upon the show yesterday, sent me an email, and he said, hey, I want to call, but I'm afraid to call. So there's folks that are out there, and so we've got you covered like that. And just ask Mikey. And that is, you just have to let your fingers do the walking. You send me an email, Steve at TFNN.com. Inside the subject heading, if you put radio show question, that makes it easy for me to turn on my phone and look at the emails and be able to pop out the ones that are coming from you listeners that are out there. So that's one way to get in touch with me, and I can take a look at your instrument, try to answer your question, whatever it is you might have. I know Tom G did that. So, and then, of course, if you're in the Tiger's Den, as Ruby, who wants to take a look at Light Sweet Crude. So those are the ways to get in contact with us. So, and I can tell you that from my standpoint, I appreciate when everybody does get in touch with us, get in touch with me one way or another. That way I can go and focus the hour on a specific instrument or whatever it is that I might be able to assist you with. So let's go ahead and get started right now. We've got the Dow train down 177 points. That's down nearly 0.8%. S&P's off 25. NASDAQ 100 down 2%. Trading out at 6114. It's down 128 points. The Russell's off 26 points. So we're mean and red across the board. Even the spot volatility index is trading to the downside. It's off 15 pennies out here. Gold is off nearly $8. Silver 17 cents. That's $1.14. Light Sweet Crude, which Ruby is trading, that's up nearly $1. That's trading out at 47.20 out here. Yeah, I'm assuming. Yeah, you've got the natural gas. That's up 18 pennies. Right now, leading the charge, the upside, you've got NetEase, some nearly $10, 4%. NF Energy is up 54%. Wow, that's a move. That's up $5. Domino's Pizza is painting the town green, up 2%. Nearly $5. Amazon up 68. Booking Holdings down 50. Google's off 30. Netflix is down 13, $14. So certainly things to look at, but we want to take a look at what you want to look at out here. So we do have some requests. We'll go to the first request that came in. This coming in from Tom G. And Tom G writes in, he says, I'm entering a long position on both JNUG and Nugget. Want to know your thoughts on both these, please. Will the government shutdown move gold higher? Now that's an interesting question. I don't know the answer to that one, but we've had about a dozen or more government shutdowns, right? At least. And so if we knew those dates, Tom, we could actually go back and take a look and see if there was some type of correlation. So, but I can't do that. But you're asking also about just JNUG and Nugget. Then you've got here, also, I couldn't hold the SPXL yesterday. Yeah, I kind of figured that and sold it. But you got back in at the end of yesterday and sold it again this morning. Yep, I got it. A great volatility. But back to cash, okay, all these whipsaws. So just says, but I can't really tell if there is more upside or downside to this market. I think it has to bounce soon with a quick relief rally. Any thoughts here? Okay. And thanks again. Merry Christmas. Well, Merry Christmas to you as well. And always for writing in and keeping us posted on what you're doing out there. So let's try to take apart Tom's question and see what we can figure out here. And the place that we're going to, excuse me, The first place we're going to start is with your trade in Nugget, what Stevie sees here. Now, yesterday we were talking about gold, and we were talking about the miners. And I didn't take the time during the show to put up this chart. This is a chart that allows you and I to go ahead and take a look at a correlation between two things. So, for example, Tom was asking about a correlation about government shutdowns and gold moving higher. Since we don't know the answer to that, and he's trading inside of the mining ETF out there. What we do know is that there is a direct correlation, or certainly when we look at this chart, directional correlation, what I should say, between the mining ETF and gold. Now, we know that because the bottom portion of my screen is taking a look at the 5-day average directional price movement between the two. And if the bar is above zero, even though you don't really see zero, so to speak, out here, and I can't put a line there. I could. I'd have to manually do it. We're not going to do that. You kind of get the picture here. If it is above zero, it says there is a correlation directionally speaking, up or down. And so, yeah, we knew that, but sometimes, you know, look, we're all visual. We're not all visual, but typically if we see something, we believe it out here. Okay, so why is Steve even wasting your time doing that? Well, the reason I'm wasting your time doing that is because we also want to understand what's gold doing. So first, Tom, gold is pulling back. Gold has not broken through a level of support just yet. But as far as taking this trade, to hold it through the weekend out here, I would first caution you and say, you know what? If gold closes below 1242.90, is that what I said? 12? No, geez, good Lord. Let me get my cursor in the right spot. I knew that didn't make sense. 1256.60. You're 1257.60. It's $1, Mortimer. $1. Will that make the difference? Yeah, I think that it will make the difference. So if you see it close below 1256.60, I'm going to say don't do it. Just say, you know what, take that money and just sit in cash, because you would be trading below a level of support that should hold. Yesterday, a nice wide-ranging bar breaking through resistance. No problem with it pulling back and testing that level today, but there is a slight problem with it pulling back below the top of that resistance level, again, 1256.60. Now, on a short-term time frame, and when I say short-term, I'm referring to a 30-minute time frame chart here. Oh, did I do that? Okay, well, the good news is I got a backup. Just happened to have a backup here. And here's what we can see, Tom, is we can see that at the time frame of 2:30, this was yesterday afternoon, what gold was doing was it was generating one of those Rhodes momentum indicator top signals, and it did that when it created that shooting star. It was not just the candle. It was the mere fact we had price movement higher doing less relative energy. So you had a topping signal out here on the short-term basis. It's important. Price now pulling back. If you see that level of support, it says that it has further to go. Further to go where? Further to go to at least this red dashed line. That's that Tommy DeMark setup trend line, and that takes you back into the exact price. I'll give you that price. Now, it doesn't have to stop there. It doesn't have to go there, but it is a likely spot where price would go, at least based upon this 30-minute time frame chart. And if gold is going to go lower, then so too should JNUG and Nugget out there. That price is 1247.60. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're going to, finish answering Tom's question here. So, but just to summarize, we know the directional correlation up and down that exists between gold and the mining equities. We also know that at this stage here, right now, gold is pulling back to a level of support that if it closes below 1256.60, says that price could go much lower. 1246 is the number. I think we came up with that 2 different ways. One was a 30-minute chart that you and I looked at. The other is the top of the weekly profile out there. And so for that reason, Tom, that's one of the reasons, or those are 2 reasons at least, why I would say you would not want to hold on to those. There is a 3rd reason out here, 3rd or 4th reason, and that's this. And that's the weekly time frame chart. We looked at this yesterday, and I think when we were looking at this, I hope my memory says this is what we were doing, and we looked at the number of 2051. Now 2051, let me turn off these profiles out here. These are the weekly time frames. It's not that this is bearish, but the thing is you just don't know now. When I say you just don't know is because there's a resistance wall inside of the GDX. I know you asked about JNUG and Nugget. We're going to look at the core mining ETF to really help us to answer that question. And on the trading week that began August 13th, you had the GDX gap down with volume, 417 million shares. Now you are up this week with decent volume, good volume, 389 million shares. So kind of similar volume here. Price should be able to close above that falling window, the gap to the downside. It has held as resistance. So a close below 2051, Tom, and I'd say doesn't sound like a good setup to me. Doesn't mean it doesn't take off to the upside. It just says the risk, the signals are saying something else is going on here. Now, if we turn those profiles back on from a weekly standpoint, really GDX doesn't have an issue until you see it close below 1979. But you wanted me to give you my best answer. And that just simply is it as I take a look at that. I see, on the TV screen, they've got, Trump on there, and we'll get it one way or another. The wall thing, I got guys and gals in the den talking about it. You, Tom, also asking about it, is going to impact gold or what have you. The insane thing, and I think I've been very consistent here. Throw them all out, both sides. That's right. Next time you get the chance to vote, you throw out McConnell, you throw out Schumer, you throw them all out. Some of them are just simply leaving at this stage here. They are all hacks. And if you guys and gals happen to be listening and you're a politician, then don't send me a Christmas card. You know, most of us run up to the grocery store here and there, and we see folks that are hard times, or maybe it's their job. They've decided to try to go ahead and collect money, and ask you for money out there, right? You've seen that. Now, you may just simply be the type of person that says, I'm not going to give them anything, a beggar out there, no matter what, right? No matter what. You might be saying that. Maybe you have a threshold limit. In other words, if the person came up to you and said, look, I apologize that I have to do this, but all I'm asking you for is 1 penny. If they came up to you and said all they really wanted, and they said, I'm not going to take anything more than 1 penny. If you have 1 penny, I would take 1 penny. Would you gladly give that person 1 penny? Would you? Because to put it in perspective, everything is about how you frame it. And how I would frame this, you realize the budget that we have in the U.S. is somewhere over $4 trillion. $4 trillion. And what they're talking about is supposedly $5 billion. Well, that's not really even $5 billion. It's like, I don't know, 3. I'm not going to get too caught up in the numbers here, because what it amounts to is 1/10 of 1 penny. So these guys and gals out there that are screwing with your 401ks, because that's what they're doing, to the extent that you believe, or Tom believes here, that they're going to impact the markets, and people do believe that. I see the conversations inside the den and anywhere else out there. We're talking about, in essence, less than 1/10 of 1 penny of the budget. And they're going to screw around. They're going to be the ones that are going to go ahead and get on the coal delivery train out here. Give me a break. Throw them out. Because, you see, these are people that just simply cannot do their job. So why do we let them stay there? Just simply throw them out. I don't care what side you're on, it's less than 1 penny. I just want to shoot my brains out. Okay, so you're asking, Tom, now let's get off of that train and let's move on to, is there going to be a bounce? At some point in time, yeah. To what extent, to what level? Are there any signals to suggest that we're going to get that out here? Or where are the markets trading into in these next 3 minutes out here? Let's take the Russell 2000. Russell 2000, Tom, is arguably the weakest of the indices. When you get to stages like this with prices moving the way they are, we like to look at all the tools we can. One of the tools that you and I have access to are our horizontal trading range boundary lines. Now, this is a weekly time frame chart for the Russell. The green lines represent the horizontal ranges that price typically travels within. It typically travels between one, gets up to the top, tries to break through it, maybe breaks through it, comes back, eventually goes. It acts as kind of a barrier. Well, right now, the next trading range boundary support level doesn't mean it will hold, but the next trading range support level, and you have to admit, these trading ranges out here for weekly base inside the Russell 2000, pretty good. Just go back and look at the 2015 high. Just come back here and take a look at the 2016 low. Just come up here and take a look at the 2018 high. Pretty close to getting out there. Well, the number is 1302. The Russell 2000 is trading at 1302. So I would say watch the Russell 2000. See if you get some type of signal out here, some type of short-term signal, Tom. Because then if you do, well, then maybe you're onto something. And if you don't, what's the next level to the downside? It's 1211. So in the case of the Russell 2000, it's peaking out over the precipice, so to speak, as to do I go lower or not. Right now it is trading back at support. If we take a look at the Dow, let's move over and take a look at the Dow. Here is the same weekly time frame chart. But what I also have in here are the midpoints out here. Now, let me just turn those off just for a second. I didn't have midpoints turned on, Midway Island turned on the Russell 2000, not that we needed it. But here, if we were to take a look at this, this would suggest to you and I that the Dow was headed to 21,512. However, these midpoints can act, so I'll put them back on here. These midpoints can act as a level of support. 22,880 is the number. We're trading at 22,758. So in essence, I'm saying, you know what, Tom, you want to watch that number, horizontal trading range number that we gave you that popped up on the chart here for its weekly time frame. This is a week that we're taking a look at, and see if it holds support, and see if the Dow closes back above 22,880. If not, this says the Dow should head down to the 21,512 level out there. That's its weekly horizontal trading range level. In the case of the S&P 500, in essence, that's what you were talking about on a monthly basis. 2476. We're at 2452. If price can hold this level, this would be an indication that maybe it's found some type of support. And if not, you're looking at 2246 in the S&P 500. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN has launched our best sale of the year. The Tiger Dollar end of year sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. So let's go take a look at light sweet crude here for Ruby, who's trading on some ultra short-term time frames out here, 5-minute charts. Now, Ruby, just to start with regard to crude oil futures, we have a 60, a 240, a daily, and a weekly time frame. So again, on the larger time frames, daily and weekly, no information here to help us out, no profiles, no anything here. On a 240-minute chart, to trade it to the upside, you would like to see, and this next 4-hour bar closes at 2 p.m. So as we come off of this segment here, and that level you'd be looking for would be a close above 45.93. We're trading at 45.97 right now. If it closes above that, you could consider taking a look at trades to the upside, which it looks like you have been doing, or at least we're doing out here. Now, if the hourly chart, which is also going to complete at 2 p.m., closes above 45.84, that's the top of its daily its hourly profile, that too would say you could be looking to the upside. Now, the reason that Stevie suggests that is simply from the standpoint that we haven't seen a light sweet crude on an hourly basis close above the top of a profile since 7 o'clock on December 17th. Today's the 22nd to 21st. So not for 4 days. So that would be a sign of a very short-term change in trend. So Ruby, hopefully that assists you with regard to at least Stevie's thinking. Now look, I can put a 5-minute time frame chart out here for you, which I will do. And here, at least on the 5-minute time frame chart, you are starting to see a series of higher lows and maybe higher highs out here. On a 5-minute basis, you want to see light sweet crude hold 45.67 out there. So take a look at the 2 p.m. time frame. See if price closes over the hourly profile box. That's the top, which is 45.84, and above the bottom of the 4-hour time frame chart, and that is 45.93. So we're going to have to go with the 93 as the number at 2 p.m. So I hope that helps you out. We've got some requests to take a look at natural gas, both Bob in the Tiger's Den and someone else that just sent a text via their phone. Says, hi, Steve, can you pull up natural gas? Wanted to see if we should go long or short. Okay, so let's take a look at natural gas out here. Now, the natural gas contract, because that's always the key question, is which contract. I think you can trade right now both January and February, but here we're going to take a look at the February contract. And if we take a look at the February contract, so this is for whoever sent the request via phone, email, and for Bob in the Den, here's what we still know. And what we still know is that you had this nice move to the upside, taking us back to the week of November the 5th out here. And what price has done is, in essence, come back to the breakout area. Maybe not right to it, but if we take a look at the February contract, we would say price pulled back to support. Now, what support is the top of that weekly profile. That number is 3.459. So just like Ruby and I, when we're taking like a light sweet crude, we're trying to get a bigger picture to understand the bigger picture, what the message is. And so here this says price came back to support. Now, we looked at this a few days ago with John in the Tiger's Den, but at the time that we looked at it on a daily basis, it had to be 4 days ago. December something like that. But when we looked at it, we did not have to my knowledge, the profile that formed here over the past couple of days on a daily time frame. And so the individual wrote in with regard to, should he be long or short, or she should be long or short? That's an excellent question, because here on a daily time frame, what you have is price trading below the bottom of its box. So it says that a rally up to 387 and sold off says, not so fast. Or at least it says consolidating between two significant areas. A significant area of support, the top of the weekly box, 3.459, and the resistance level of the daily, which has not been tested, so we don't know if it's resistance or not, and that level is 387. So my answer for you today is, if you are not in a position, I don't see the reason to get into one, unless you're a short-term trader and you're willing to go ahead and take the long trade right now and take that money off the table when it gets to about the 387 level out here. The 4-hour time frame, or 240-minute time frame, is neutral. because price has been trading with inside that box, well, ever since it looks like about 10 o'clock in the morning on December 20th. So that was yesterday. So it's just been really trading with inside a range. Now, it's a slightly different range than what you and I came up with, but not that much, 351 to 369 as the number. So my response is going to be, if you're not in a position, don't get in a position. If you are in a position and you're in a long position, then what you'd like to see is natural gas continue to hold the level of support, that being the top of the profile, 3.459. What happens if it doesn't? If it doesn't, then you're going to look at price pulling back to at least, you would think, 3.285. That is the bottom of that box out there. So, Bill, does that help you out? And the individual who sent in the request by phone, I hope that it does. That's just simply the best information that I've got. And yes, with regard to throw them out, I was referring to every single politician. Let's just simply do this, folks. Let's just simply give them one term to show what they can do, and then they're out of there. All of them. All of them, so we can keep them on their toes, doing what they're supposed to be doing, which is representing us somehow. Maybe they don't represent your thinking or my thinking, but if they win, if they're winners out there, then you've got to give them the chance. That's how. If you don't want to do that or give them the chance, then move to France or someplace else and let them just tax the living you-know-what out of you. You know, so that's my thoughts. Oh, please, no soapbox. Oh, man. Hey, I got to, Mr. Bill, especially in times like these. I've got to. Okay, what other questions? Let me see if there's any other questions that have come in here, because that's really what I want to do, is get to questions. Alan writes in, and he says, oh, well, that's interesting. He says, I'd much rather listen to your soapbox. I swear to God, that's what he wrote in here. Then that's it. Happy holidays. Well, you're welcome, Alan. Okay, Phil's asking about the Qs. So let's go to Phil. Phil writes in, hi, Steve. Qs may end up testing February low today. So let's go take a look at the QQQ ETF along with Phil out here. So let's take this. Let's put this up. And if we take a look at, so Bill wants to listen to SOAP versus the SOAP box. Oh, I see. So here's the February low that Phil is taking a look at. Okay, so we're there. And that level, as he was pointing out, was 150.13. And you can see we're trading right now 149.86. Let's go on. Look at the weekly volume. Up there was 522 million in February. We've got 400 today. I know you say the Qs like to bottom on volume. That's true. And 400 is high. But the fact that this will be lower than February week will count as a positive test, he assumes. And now Phil wants to get into the politician thing, which is cool. So he writes, P.S. Our politicians argue about whether Corbyn said stupid woman in a Brexit debate in Parliament. They think they are worse than yours, but it is so close. We're going to take a look at the Qs for Phil when we get back from this breakout here. That was off about 100 points. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at the QQQ Series ETF. Volume on it today is about 86 million shares right now. What it's testing, as Phil was pointing out to you and I, was the February 9th swing point low. That has 113 million shares. So I am thinking that it's going to have more volume than the February 9th low. Now, typically what that would mean, if price is rejected, meaning it closes above 150.13, says that 150.13 would at least be tested once again. You would assume maybe that might be on Monday when we're open for a half day out there with the markets closing at 1. So we won't be doing the Trader's Edge show, but we'll be back with you on Wednesday. But Phil was also stating, and correctly so, that if you go take a look at the dynamics of the QQQ Series ETF, is that it bottoms with volume. So those big volume washouts turn out to be bottoms inside the Qs. Now, this is a candle chart out here. I also happen to have turned this chart into a weekly chart. Phil was mentioning a weekly chart. So here's the weekly chart. But instead of a candle chart, I'm just simply showing the closing price out here. And so on the closing price from a weekly standpoint, you can see we're well below the February low on a weekly basis. The February low's close was 156.10. We're trading at 150.16. Phil, I don't know if that means anything to you or not, but we're below that price on a closing basis from a weekly standpoint. But these green arrows on here, and you'll see a red line on the bottom of my screen. Maybe I can just do this and expand it a little bit. Might be a little bit easier to see. That is the volume bars that form inside of the weekly time frame. And the green arrows are showing you different areas where you see bottoms. And then you will see below that, as an example, April of 2014, the volume was 348 million shares. And that was a high volume week. That was also a bottom. And the Qs, slightly different. So so I just want you to know that the Qs have this unique aspect, and a way that it forms bottoms is in fact with volume. If we take a look at the next high volume bar out here on a weekly basis, it happens to be October 13, 2014. And no, that wasn't tested, nor was the prior one out there. And maybe at some point in time, it goes back there. It doesn't have to. It's just the way that the Qs make bottoms. It's not because that's what I think. It's because that's what it actually does when you go take a look at the chart out here. So that week was volume of 424 million shares. And Phil is correct. This week's going to be 406, probably going to be 420 or something like that. And so there is a bottom. If you come here, and we can, you can see the different ones we have highlighted. Take, for example, February in 2016. What was that? A high volume week. Now, that red line is just kind of like a little threshold line that I've got out there. You can do this on your chart. This is easy to do, so you can go back. You can take a look at it on a daily basis. You'll see it on a daily basis, or usually within a day or so. But if you just get rid of some of the noise, you'll see the type of bottoms that get formed. For example, the week of February 5th, 2016, or 2018, which is what Phil had mentioned, or I believe that he mentioned out here, you would think somebody might have said, look at all that volume, which was 522 million shares, highest volume bar we have seen on a weekly basis in 2015, 16, 14, 17, and 18 out there. And somebody might have taken a look at that and said, you know what that means? That means the sky is falling. Did the sky fall back then, or was that a bottom? Exactly. It was a bottom. Now, it happened to be tested on a closing basis. When we use a line chart out here, it was tested back on April 2nd with much lighter volume, 318 million shares out there. So, yeah, the Qs make bottoms with volume out here. Now, we've had a series of high volume weeks inside of the Qs between the week of October 8th and where we're at right now. Some have acted as very short-term bottoms. And so we're kind of in this thing here, Phil, where unlike the past, where it's very clear how they work, right now you probably have to take a look at a few other tools as well, as opposed to just use this, which I know you wouldn't anyways, but to just use this as one of those aspects or anomalies. But the Qs and their volume aspects is a very cool tool, and every single person out there, doesn't matter what your level of technician skills is or are, you can use this, and you can go back and you can prove it, and you can say, that Steve guy, he really knows his stuff, or that Steve guy, he's really full of it. But we do it on the screen out here, so I'm not full of it, because just how it works. So Tom was asking about, shouldn't we see a bounce? And the answer is we should, because the New York Stock Exchange is in that extreme oversold territory area. Right now, the advanced decline oscillator reading is minus 253. Usually minus 150 is good enough to get it done, but not this time. Now you're down at the minus 250 level. Look, back when there was at least a counter trend rally, which is all that Tom was looking for, Tom G, October 11th, you got down to a reading of minus 291. Now, you saw a little counter trend rally. The ones that set up the nice bottoms are where you see price moving lower with a higher advanced decline oscillator reading. And that was back around the October 3rd, 23rd, October 29th time frame out. This, by the way, is a daily time frame chart that we are looking at. Those divergences along the bottom set up the better hooks for at least a nice counter trend rally out here. And by the way, inside the New York Stock Exchange, the counter trend rally you would think would take you to about 11,956. That's 800 points from where we're trading right now. That's probably one of the reasons why Tom is trying to figure that out. But I don't see it as we speak right now, at least not at 1:48 in the afternoon. So thanks for writing in, Phil. I hope that helps you out, at least with regard to Stevie's take on the Qs out here in a quick view. So I don't see any other questions. If somebody sent one in, I apologize, because it hasn't come through onto my phone just yet. I don't think there's anything else inside of the Tiger's Den. If there is, and I didn't get to your question, would you be kind enough to just repost it? Because there's just so many, so much stuff that's going on here that it's hard for me to go read everything. So if you just put it in there, or even if you did, you want me to take a look at something, then go ahead and post that in. In the meantime, let's go take a look at something else. What would that something else be? That something else would be, got everything moving lower today for the most part. Still the spot VIX index. So that's off 92 cents out there, with the Dow off 126, S&P down 18. Treasury bonds are off a bit, just 2 ticks, but it looks like they do want to trade lower. I know what we should look at here. Let's go see what's going on with regard to Treasury bonds. and what they're doing in the four major currencies out here, because that's really what it's all about. So in the case of Treasury bonds right now in euros, they're actually headed up towards the high of yesterday. So they're not really backing off a whole lot. In the case of Treasury bonds priced in yen, right now, those traders look to be sellers versus buyers. And with regard to Treasury bonds in pound sterling, I'd say they're more neutral than anything else. But in dollars, it looks like T-bonds headed to 143. 144 really would be the number here, 144 and 25-30 seconds right now. A close below 144, and 142 becomes the nut. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So no other requests that I see out here. I'm just going to go back to the GDX so I can complete my thought out there if I didn't already. So one of the interesting things or patterns here about the GDX, going to be interesting to see how this plays out, is that it completed a Gartley sell pattern. Now, inside a Gartley sell pattern, one of the requirements is an A to B equals CD, and you can see that from the low on September 11th, that was your A point. To the high on October 23rd, that's your B point, to the retracement or C point, about a 0.6, when a little over that, on the trading day of November 13th. The 1-to-1 A to B equals CD to the upside is, and yes, I can now, is 21.49. The actual high that took place on December 19th was 21.47, 2 pennies. But that's not the big deal. The big deal was the way that it sold off. It was a key reversal session. It was a bearish engulfing candle. And now price pulled right back to support. And it was a high volume bar. Was it high volume moving higher, high volume moving lower? I don't know. What I do know, it was a Gartley sell, because the other portion of a Gartley pattern is that you're looking to be able to get into a large trend that was underway. Where's the best way to do that? Well, inside the GDX, quite frankly, a large trend was to the downside out here. Now, Gartley patterns have 5 different potential outcomes. And those outcomes, the first ones are retracement levels. You go all the way from the A point to the D point. Well, if we do that, what we're going to see is that the first retracement level was actually hit 2 days ago, or very close to it, the 0.382 retracement level. That's why it's really important, and Tom was taking a look at what's the gold contract doing. We've already kind of gone through that ad nauseum. You know what I'm trying to say out there. And we took a look at that weekly time frame chart and resistance that's up there. Because the next level of retracement, and Tom, the better one may be a pullback to about 1888 out there. So that's the show, folks. Thanks so much for being here. Look, have a happy holiday. Merry Christmas. We won't be back with you until Wednesday. I want to thank you for giving me the gift of your time, allowing me to occasionally get on a soapbox, share with you my charts, answer your questions, give you the best that I've got, give the best to everyone else in your life, and things will turn out just great. So thanks so much for being here, and we'll see you next Wednesday. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.